Hey, g'day guys, it's Dean here. Look, I wanted to give you a bit of a overview of what I see coming up this week in the markets. Now, I look at three particular charts. Obviously, you can't follow them all, so I'd recommend that you just pick one or two that you have an interest in and really get to know that chart whilst you're taking your swipe trades, you're taking your harmonics, all that sort of stuff, and you're learning. Just get to know your way around one or two charts. So for me, I picked three. I'm going to give you a bit of a market forecast for what I think is going to happen this week. It's currently the 19th of August, so the week of the 20th to the 25th, and I'll give you some possible trades to look out for, very similar to the swipe trade format. So you can look at these going, and as I keep an eye on these markets, I'll try and post these into the Facebook community as well, so you can see them. But I wanted to give you a bit of a market analysis so you can see what I'm seeing and start to develop that skill set. So first one I'm going to look at is pretty much my favorite, the EURCAD, the Euro Canadian dollar pair. I've been following this one now for about a month, and I've been really picking the sort of highs and the lows really well, and I'm starting to get in really tight entries on some of these trades, which is great. Now, if you saw my call on Friday, you might have actually got in this particular trade early on Friday, which is great. We're holding it over the weekend, so we made 75 pips very quickly in the space of about 4 hours on Friday. And now what we're looking for is another possible re-entry point, which I'm going to cover over. So in the EURCAD, you can see we're definitely in a downtrend. You can see that these highs and these lows are, in a downward, what we call a downward channel. All right, and you can generally see that it generally follows the same sort of path: a few days up, half down, a few days up, half down, a few days up. And now what we would anticipate is this sort of movement down. Okay, we'd expect the same sort of market movement over time. So what we're going to do is we're going to sort of zoom into this time period here. So we go from a 4 hour into a 1 hour. All right, and so the market's moved up since mid last week. It's come up into here, and this is where it basically said look for an entry point around that 1.5 mark, 1.50. You can see literally it got all the way to 1.49. If you look at the high here for that particular time, 1.49983. So we got within less than 2 pips of actually hitting that 1.5 entry area. So if you're able to see that the call that I put out and you're able to jump in, excellent. I got in here on this green line and we rode it all the way down here, and we took TP1 just in here. All right, now what we've seen just before the market closed is basically what we call a retracement. So the market's had this massive sell-off, okay, and now people are buying back in because they think it's a good price to get back in. So you start seeing people come in. Now what we would expect to see is at the 61.8% retracement line, or the Fibonacci retracement. You'll need to check out some of the advanced and intermediate training for what a Fibonacci retracement is. But we would expect a sort of retracement around to this particular level at 1.4952, somewhere in here. Okay, this is a great opportunity to re-enter the market. Now I do have somewhere around here. There we go. This is a great time to get back into the market if you missed the trade on Friday. Okay, so I'd be looking to sort of get in, and I might even create a new position, right, in around this particular time frame and price in here. Let's see if I can highlight that color a little bit stronger. Background. Okay, so that's where I'd anticipate around that 1.4952 to 1.4962 in that particular range. Just in here is what I'm expecting that to happen. Okay, and then we'd expect the market to continue to make its downward movement. All right. Now the only risk I really see with this trade is this is the first lower high that we've had on this particular time frame. So look, it could be the start of a new uptrend, but I'm just not seeing it at this stage. Everything else indicates we're still in a market downtrend. But that's why we have stops in place. So I'd recommend you have stops up here. Okay, above the previous high. All right, that is a bit of a jump. That is 50 pips. All right, it is quite a bit of pip risk. All right, you might want to just put something in a little bit tighter and try and get in. But ideally what you'd be looking for is the market to have started to turn and indicate that it's starting to go down, and then you get in, okay, and you go more confidence and you get in, say down here, right, on a sell stop. So wait for the market to come up here. Once you know that it's touched there, you might want to enter as a sell stop at 1.494, okay, and as the market comes down and grabs it on the way down, you're good, and you would put a stop loss in above the high. All right, but I'll call that through the week when I enter the trade, and I'll post that into the messenger group. You can see that, you know, pause now if you want to write down these particular numbers. So there's the potential take profit points, and I would just sort of liquidate part of your position as you make your way down, and we'll move stops on the way down as well. If you are in the trade at the moment, well done. Again, you could potentially re-enter or just allow the trade to move out. Now you should have stops now. If you are in the trade, you should have stops now at break even plus some profit. Okay, already. All right, so that's the EURCAD this week. EURUSD is my secondary pair. It has the tighter stops of any currency pair. It's the most traded pair of all of them. That's why I trade it. So it behaves in the manner that we expect it to behave in. Excuse me. All right, so let's just start on a 4-hour time frame so we get a bit of a big picture view. Okay, again, you can see we're definitely in a downtrend. All right, we've been making lower highs and lower lows, you know, for a number of months now, a number of weeks now. All right, all the way down. We broke out of this channel to the downside. All right, now last week I was looking to re-enter this trade in around here between the 50 and the 60 mark. All right, and then ride it all the way down to this green support line. Unfortunately, it only come up to the 38. All right, bounced off the 38 and kept moving down. So I didn't actually enter the trade. It's a little bit unfortunate, you know, because we missed quite a few pips there, around about 160 pips there on the market, but that's all right. So what we're seeing now is a retracement again. So just you'll start to see these same sort of patterns occurring over and over and over again. So what I'm looking to see is from this particular high to this particular low here is a 61% retracement. Now notice how this 61% retracement also falls on this particular what we call support and resistance line. So it's resistance because we're underneath it. And this particular line here, all right, you can see runs, you know, fairly parallel to this. Actually, it's fairly parallel to this one. All right, and it happens to be about double the range. So this is double the range here. I'm expecting it to come up here. So I'm looking for entries around about this particular point. Again, pause the recording here if you want to get those numbers down. All right, but it's the same philosophy on the previous chart. I'm looking for the market to come back up here, and then I'm looking to see on a lower time frame, say on a 1 hour time frame. Okay, as the market makes its way up here, all right, into this sort of what we call the sell zone or the entry zone, I'm looking for the 1 hour time frame to start to show indications that it's starting to go downwards. Whoops. Let's go here. Let's bring this across. Okay, so, you know, and if it follows this exact pattern, we've been expecting something on the 21st of August, okay? So, which is Tuesday morning. So from Monday evening, Tuesday morning, sometime in there, I'd expect it to be inside this particular zone. I would have my stops. Again, I would be looking for the high to form. Once I know the high is formed and confirmed and the market's starting to come down, I put my stops just in above it. As a early entry, I put my stops in above here, okay, to start with, and then I'd be looking to bring them down fairly quickly. There's your take profit points along the way down. 1.4286 happens to be right there. 1.380, okay, right there. And then there's our TP3. So as the market's coming back down, we're looking to enter here, take profit, take profit, take profit. Okay, that's the goal. All right, so that's EURUSD this week. And last but not least, GBPAUD. GBPAUD isn't as nicely trending as much as the other two, but we are in fairly similar territory. Again, let's go back to the 4 hour to start with. All right, zoom out a little bit. Again, you can see we're in a downtrend. Okay, so the reason why it's important to check the trends on the higher time frames, like 4 hours, is you want to trade in the direction of the 4 hourly, and ideally if the 4 hour and the daily are both in the same direction, that's the direction you want to trade in. Okay, so the market is in a downtrend. We're not looking to do buys on the way up, okay, because that's counter trend trading. So when we do this type of market structure forecasting, we want to wait for this indications to be in the same direction. So we're in a down market, so I'm looking for signals to sell, okay? I'm not looking for entries to buy. All right, so that's why we always start on a higher time frame. So we've got the 4 hours, we're in a downtrend, we're looking for sells this week. We go into the 1 hour time frame. So we'll zoom in a little. All right, you can see that the market has moved down and then it come back up. It moved down, come back up, move down. All right, now I'm anticipating it's going to come back up. So what we don't know at this stage is whether or not this has formed its bottom. Okay, it's too early to tell. Let me just move these yellow lines out of the way a little bit. Okay, it's too early to tell if this is the bottom, okay, because come tomorrow morning, you know, this market will come out and just go down a little bit, right? So we don't know yet whether that's the low. So that's the first thing we need to look for. Will the market go up from here? If it does and come back past the 38% retracement, then that is definitely a lower low. All right, so all going to plan, and that is the case, which is what I'm anticipating. Then we can follow this up, okay? And again, it's almost the same as all three charts, right? We always look for the 61% retracement, okay? So we're looking for an entry in around here, okay? And then we follow the chart down. So we're looking for sells because the market's in a downtrend, all right? And we look for sells this way, all right? Again, pause the video now if you want to write down those details for entry points, stop losses, and particular target points. So they're the three charts that I'm looking at. They're the three things I'll be keenly watching this week. As these particular charts hit, or ideally they hit into our target zones for entry points, I will make a little, if I remember, make a note and post these into the messenger group so that you can jump on them. But I would definitely write down the details now. And then you've got all that information ready to go, and also come in and say, you know, EURCAD's inside the sell zone now. Entry here, and then, you know, you've got the data ready to go. I hope that was useful. Look, leave some comments if you found that interesting. I am starting to think about putting together some classes to help you build out these particular charts on what you need to do in order to start trading in market structure format, rather than just sort of, you know, relying on swipe trades or LBO or other stuff. You do need a little bit of time, obviously, to look at it. I spend probably maybe 2 hours on the weekend, and then maybe an hour each night, just sort of checking the charts and see what's actually happening. And then, you know, I bounce my ideas off my trading partner and make sure that obviously what I'm seeing is what she's seeing, and then away we go. So if you're interested in going, yeah, look, I'd like to learn a little bit more about how this particular works, let me know. And if we've got enough interest, we'll put together a bit of a trading session, learning session, where we can put some videos out and you can learn this type of market structure. All right, that's it. You know, whatever you do, make sure you look after your account. If you're in demo, you know, get in there and trial stuff, and, you know, put trades on, put your swipe trades on, and it's all about learning the market. Be smart in your risk reward. You know, it's very easy to get carried away if you get a couple of trades going your way and you start increasing your lot size too fast, and then all of a sudden things will go against you and you'll wipe out an account. Trust me, I know. So, you know, obviously use a proper risk management, and, you know, like always, you know, I'm just forecasting here. Whatever you whatever you do, this is just education and knowledge about what I'm doing. If you want to take the trades, fantastic. But ultimately, you know, it's your call, your money, your account. So be very careful in what you do. Obviously, trading Forex is quite risky. So, you know, be safe and make sure you're always protecting your account. All right, take care. I look forward to bringing you an update next week on how we went and then what I see for the following week.